Good morning, everybody, and this is your S&P 500 day trade setups for today. So for those of you that got the trade I gave you yesterday, congratulations. It was a nice little one-to-one trade. And for those of you that are not aware yet, please put your notifications on within YouTube, and you'll see in the YouTube chat I will give you the trades that I do see and that I do take on a daily basis. So yesterday was pretty much a range bound day, or up and down. We did get to some structure, and I'll get to that on the lower time frames, which allowed us the opportunity to basically buy, to sell, move with the trend. But if you look at the bigger picture here, we are clearly range bound, big up, big down, big down, big up, big down. So, and I don't see that changing until the Fed minutes are out later today. So I suspect we're going to continue bouncing around within this range. Now, for me, the first test of the structure was done yesterday, and then the buyers are coming in. So this is the part that's interesting me. You can see pretty much a double bottom, ever so slightly a lower bottom, but we've got a little bit of what looks like diversions at the moment. I'm not convinced of that. And I'm also not convinced that this is a move to the upside. This is really starting to look like a consolidation for a bigger move to the downside. And this is the area we need to get through, obviously. And that is the 3571 and let's call it 3550. So we need to get through 3550 before this is going to continue to the downside. So until then, we are probably going to be ranging. So yesterday was a pretty much big up and big down day. Nothing really on the cards. We have formed a lower high. It's just got this trend line in, and we've got a flat bottom. So that could be the start of a flat bottom triangle. Nevertheless, the highs and lows of yesterday are the ones that we need to pay attention to. So let's just get to the 15-minute and just highlight what we had here. So entry I gave you was this area here, and the level that we were looking at, right, is just fine-tune that a little bit, which was there. Okay, so 3640 was the level that we were paying attention to. You can see on the 15-minute there is the reason, lots of previous resistance there. Then above it, try to use support as one bar, and then chaos again, and then again use it as resistance. So fairly strong level. That was from when was that? That was Monday. Sorry, that was Monday. So that was Monday structure, and you can see inside bar off there. Trade I gave you was a break of that, which was around 36.24. Stop was above here at 36.43. I think we said, and target area was pretty much in this area here where we are now, which was 35.94 area. And that's exactly what played out. It took a while to play out, but was looking like a bit of a flag at one stage, but after eventually got going. It's to be expected, to be honest. So for today, I don't see anything else changing. The only thing I do see changing is we're probably just going to sort of be small bars like this, just bouncing around while everybody waits. When the minutes come out, there's going to be chaos as all the algorithms try and intercept or decipher the minutes and look for stuff that's not there. The reality is the economy is in a bit of a pickle, and central banks are in a bit of a pickle. The banks themselves are in a bit of a pickle. We're in a shambles. That's basically what's going on, and the central banks need to either be aggressive or they need to prop the markets up, and they've been propping the markets up for so long that I don't think they can do it anymore. So they need to let things take its course at the moment, which is probably not nice for those of you who are close to retirement or are in retirement, because it does impact your nest eggs at the moment, as this market is so volatile and dropping 3-4% a day sometimes, and we'll have to wait and see. But the reality is, until things stabilize, they're going to have to keep raising interest rates, And as they raise interest rates, markets are going to fall. So if there's any noise in there about extended interest rate hikes beyond what the market's expecting, then you can expect this to fall really hard. And there's a lot of thought around that at the moment, around the macro view. I mean, you can do your own research there, but it is very, very possible that we do drop below this. And if you look at the daily, you'll see been a strong move down, and now a little bit of consolidation, sorry, with a crossover of the moving averages. So, guys, I'm very wary at the moment, to put it bluntly. We are in an area of what should be good support, and this inside bar and pin bar on the weekly is a bullish bit of structure, but you can only get in on the break of the tail if you're trading us from a weekly perspective. So that is worrying to me. The next area that's really going to offer any kind of support is going to be down here at 33.92. So if you look at that, that's another 5.9% fall in the market. And if we get through that, it's pretty much lights out as far as I'm concerned, because then your next bit of structure is all the way down here at 30, let's just call it 3,000. And that would be another, call it 20% fall in the market. So, yeah, are the Feds and the central banks and the bankers and investment houses, are they going to allow that to happen? That's the big question we have to ask ourselves. So, yeah, interesting times. But for me, I think we'll just wait for the noise later today to see if there's anything, which basically means I won't be getting a trade in today at all. So we'll be sitting on hands, not going to chase anything that's not there. Hope that helps somewhat, and we will catch up with you tomorrow morning. Cheers for now.